Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Ryan McCormack, Factor and Core Equity Strategist at Invesco, for a weekly review on Nasdaq-100 trends. And of course, we'll talk about the rate and fixed income market reaction to the inflation data and jobs data that we saw last week. Ryan, it's great to see you as always. Welcome back to Trade Talks. And let's quickly get a review on Nasdaq-100 weekly performance.
Yeah, so performance was pretty much a dead heat when you look at Nasdaq 100, S&P 500, and S&P 500 value. All told, QQQM was down 29 basis points. QQQ and the S&P 500 were down 30 basis points, and the S&P 500 value was down 20 basis points. QQQ and QQQM, they had built up a pretty big lead by Friday. Those two strategies were up nearly 3%. From Tuesday, but risk off, was back in vogue on Monday and yesterday around worries around recession and investors awaiting the CPI data that was released this morning.
And if we take a look at sector performance, healthcare really stood out over the past week.
Yeah, interesting, right? It's an underweight in QQQ, and against the S&P 500, the sector was up 1.1% in QQQ versus down 18 basis points in the S&P 500. So that was largely you can largely look at Moderna as the reason. It was the largest relative contributor, up over 11% for the week and over 8% on Friday alone. Discussion around a second round of boosters for those adults under 50, and optimism around the success of its new booster that was being developed. Tech was also higher for the week by 0.28%. Overweight position in QQQ made it the second largest relative contributor. And then on the other side, overweights to consumer discretionary and communication services, largest detractors to relative to performance, and were the only two sectors in negative territory for QQQ.
All right, let's take a look at the 10s versus 2s, because really the news of the day was the CPI print. I mean, 9.1%. It's a tough headline number to justify, Ryan.
Yeah, so seeing that 9 handle on year over year was a little staggering, right? Definitely higher than estimates of 8.8%, up from May's number of 8.6%, which was viewed initially as a month to moderate from April, and up 1.3% on a month-over-month basis. So over 40-year high. The last time CPI was over 9 was in late 1981. Higher prices, pretty much across the board for food. Up 1% month over month, 10.4% year over year. Gasoline up 11.2% from May. Primary residence rent up 8.8%. And then even the core, you're excluding the more volatile food and energy. Those components, the core rose by 5.9% year over year, higher than the average economist projection, although slightly lower than May's 6% reading. And it's weird, markets have kind of bounced from negative to positive today as talks of a 100 basis point hike at the July Fed meeting is starting to pick up. And you'll see in the chart there that the yield curve is inverted to levels that we haven't really seen since the back end of 2000, which of course is an indicator that we might be heading for a recession. And then this morning we saw economists from various banks now forecasting the U.S. to go into a recession later this year.
Yeah, I mean, if we take a look at your last chart here, the implied overnight rate and the number of rate hikes that are expected, you could see that peak in November and December and into the first quarter of 2023, perhaps somewhat of a respite towards the back half of 2023, but certainly in hike mode.
Yeah, it's interesting, right? I mean, Fed funds futures are now pricing in a rate hike for February of 2023. Yesterday, the futures had forecast a cut in March of 2023. Last week, when we were talking, May was priced in. So I think the read-through on the data in today's action is A, potentially even more hawkish Fed in the short term. 2, recession sooner than later, and then C, dovish Fed returns in the first quarter of next year. Obviously, all subject to change, but I think that's the read-through for today's market action.
All right, Ryan, appreciate the insight as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.